Adobe shares have dropped over 20% since the start of this year, and they have dropped over 50% since their all-time highs. So what is going on with Adobe stock? Is it still a good buy? Is it still a good investment for the long term? In this video, I'm going to find out. But if you like this content, please like and subscribe, and then let's get straight into it. But let's quickly go through Adobe's business and business model. So they operate in three main segments, and those are digital media, digital experiences, and print and publishing. Now, digital media is their biggest bread and butter business. It provides about 74% of the revenues in 2024 and continues to be the largest portion of their business. This includes things like Photoshop, Lightroom, Illustrator, video and motion tools like Premiere Pro, After Effects, Character Animator, AI and asset services like Adobe Firefly, Adobe Stock, a bunch of other stuff that is the bread and butter of Adobe's businesses and services. As a web developer, I've used a lot of these tools and I've used them firsthand, so I know how Adobe's products work. And so far I can say that even though there is competition in this space from Canva, from Figma, from others and other AI generated tools, Adobe still has network effects in that space. And if they can continue to integrate AI efficiently into their products and services, they should be able to keep up at least with the AI revolution. Now, their digital experience segment focuses on businesses, other businesses. It's a B2B type of thing. So they provide a suite of tools for customer experience management, such as Adobe Experience Platform, AEP, which is a platform for bringing together an organization's customer data to power personalized experiences. They have Content and Commerce, Experience Manager, AEM, that's a content management system. Adobe Commerce, which was formerly known as Magento, which was an e-commerce platform. Then they also had data insight tools for businesses like Adobe Analytics, Customer Journey Analytics, personalization and campaign management, Adobe Target, Adobe Campaign, and also advertising. So they had Adobe Advertising Cloud as well. And finally, the print and publishing is kind of a legacy segment. It has things like Cold Fusion and various other desktop publishing technologies that are kind of getting phased out. They're not really a big part of their revenue. The major thing that investors want to see is the largest portion of their revenue, the digital media segment, integrating and providing revenue from AI. So they're super focused on how Adobe is integrating AI into the digital media services and products. And you can see they've prominently put the Adobe Firefly stats and other AI stats on their website about Adobe. You can see here they said more than 29 billion images generated with Adobe Firefly since launch, 40 million plus K-12 students provided with Adobe Express for education to support digital and media literacy, 100 plus Adobe creative campuses worldwide, 700 million plus Adobe stock assets, 50 million plus members in the Behance community. Our approach to generative AI. Adobe is simplifying human ingenuity with AI, helping customers enhance their creativity, increase their productivity, and deliver more personalized experiences. And you can really see that they're trying to integrate it into all of their services. They have AI assistants for Acrobat. They have other AI tools and integrations with all their other services, such as image generation and other things like text to image generation. Now, I will say that they have a lot of competition in this space, especially after Google has introduced some of their text to image generation features and text to video generation features. So Adobe definitely has their work cut out for them in order to combat the threat of, big tech like that, as well as other AI innovations going forward into the future. So let's look at the recent earnings call and the transcript from that earnings call to glean any insights that we can about the AI integrations, how their businesses are doing, business segments are doing, and just what the CEO is saying. So here I brought that up, and I want to scroll down to the actual financial results. So he says that Adobe had another strong quarter and delivered double-digit top-line growth and profitability in Q3, which ended, I think, in September. we achieved record revenue of $5.99 billion, representing 10% year-over-year growth. GAAP earnings per share for the quarter was $4.18, and non-GAAP earnings per share was $5.31, representing 14% year-over-year growth. He also talks about how to change their strategy involving AI. AI represents a tectonic technology shift and presents the biggest opportunity for Adobe in decades. So they're seeing it as an opportunity rather than a double-edged sword. They want to use AI to integrate and make their products better than their competitors. Delivering an end-to-end ideation to creation tool in new Firefly applications. And then we've recently added Google Gemini Flash 2.5 alongside Google's VO and Imagen models to the roster of partner models from OpenAI, Black Forest Labs, Runway, Pika, Ideogram, and others. So this is how they are, one way that they're combating the competition that's been rapidly increasing. So they're introducing their competitors' models into their own suite of products and services. We're offering customers choice and flexibility to use the right model within Adobe applications without friction of switching between workflows and platforms. One thing I'll say about this is businesses do not really change once they're embedded into an ecosystem. Look at NVIDIA chips. They introduced their hardware and partnered it with their CUDA software. So that tight integration of hardware and software really locks in businesses who have large scale from moving to another competitor, because it is prohibitively expensive to do so. So I see that in what Adobe is saying now with their integrations of AI into their products, the products that the businesses are already using. Now, it's a little bit more unclear whether individual creators will stick with that, but that's just a wait and see approach. As a creator myself, I know that I've been using Canva a lot instead of an Adobe product. So that is just out of convenience because they have the web browser. You can just pull it up, log in immediately, and just do your image editing and then move on. But for like serious professional creatives, they might need more advanced tools that have a bigger scope of what you can do. We see that digital media achieved a revenue of $4.46 billion in Q3, which grew 11% year over year. We exited this quarter with $18.59 billion of digital media ARR, which stands for annualized recurring revenue, growing ending ARR 11.7% year over year. So they are growing and they are posting great numbers. The digital media group is split into a few groups itself. The business, professional, and consumers customer group had a strong quarter. The introduction of Acrobat AI Assistant brought a new conversational interface that enhances the experiences of customers consuming PDFs. Their digital experiences group, which is their B2B offerings, they say they had a strong Q3, achieving revenue of $1.48 billion for the quarter. Subscription revenue for the quarter was $1.37 billion, representing 11% year-over-year growth, making us the largest software provider in our category. So all in all, they're summarizing here, and they said total revenue is $5.99 billion, which is 11% year-over-year growth. The digital media ending RR was 11.7% year-over-year. Digital media segment revenue, 4.46. And digital experience segment revenue, 1.48. Digital experience subscription revenue, 1.37. And this part is extremely important. They generated a record of $2.2 billion in cash flows from operations, which is amazing and really good to see, because that's the operating cash flow that they can use for other things in their business. This is what you want to see. 8 million shares repurchased this quarter. They're doing buybacks like crazy, and that is what you want to see as an investor in this company. That is directly returning value to you. Record remaining performance obligations, RPO, exiting the quarter was $20.44 billion. And last, let me go through what they think that their financial targets are for Q4, their guidance basically. They're saying guiding for $6.075 billion to $6.125 billion for total revenue. Digital media segment revenue 4.53 billion to 4.56 billion. Digital experience segment revenue 1.495 billion to 1.515 billion. And digital experience subscription revenue to 1.395 billion to 1.41 billion. Earnings per share, they expect GAAP to be $4.27 to $4.32. Updated 2025 financial targets. So let's check out the valuation of Adobe and see whether it's a good investment or not. So here I've pulled up Adobe in the valuation software, and first you see that their PE ratio is 22.47 trailing 12 month, and their forward PE is 15.43. These are excellent numbers, PE ratios for this company. 1 year price target is 454, which is much higher than the 348, 340s, what it's trading at right now. See that the revenue is just going up and up and up. And as they projected in 2024, it was 21.5 billion. And based on the guidance, 2025 revenue is going to come in over 23 billion, 23.6 billion. That net income is going up just like that. It's great to see that it's not being caught up in the top line. A lot of that money is coming into the bottom line. And you can see a nice steady increase there. See a nice increase in the EBITDA. You can see a nice increase in the EPS. Cash and debt in check. Very important to look at for investors is whether a company is buying back their shares and how they're buying back their shares. If they're buying back shares regardless of the price, that's not a good thing, because then they're just trying to artificially increase their EPS numbers. But if the management is strategic about buying shares when the company's actually discounted, actually undervalued, and they believe in the long-term prospects of the company and then buy it, that is what you want to see. And you can see that Adobe is definitely buying these shares as the price and the discount increases on the company value. So they're just going to keep chipping away at this with their huge amount of cash flow. You can see here, their free cash flow just keeps increasing and increasing. Here in 2024, it was $7.8 billion. Also, you can see the share buybacks have increased with that increase in free cash flow. So they're really reinvesting the capital in the right way. The price of this is still much higher than what it is right now. So I believe that's because of their strong cash flow, free cash flow. Multiple of earnings valuation, you can see that if I kept the net income growth at 12 or 12, around 12, and the PE steady around 15, which is what the forward PE is. This should change, but we'll just keep it that way. You can see that a fair value in 2029 of $477.4 per share, which is not too far from the actual analyst estimate of 454. And that indicates about a 30% upside from here. Now, I'm most excited about this price to earnings. Price to earnings, current one is 22.5x. And you can see it's just been dropping and dropping and dropping, with the share price just coming down and down and down over the time, and making it more attractive to investors. So what am I doing? I think Adobe is attractive. I'm a little concerned with their AI competition. They are trying to mitigate it with integrations with some of these competitors, trying to integrate AI into their services, their digital media products and services, their digital experiences products and services. But I'm still a little worried about how AI is going to affect them. For right now, I'm going to stay out of Adobe. If the price drops even lower, perhaps even below 300 a share, I would be considering buying these shares. And that's it, guys. Thank you for sticking to the end of this video. If you like this content and want to become a member, please visit beardedinvestor.com, where I have my membership options available. And if you become a basic member, you get access to all my stock buys and sells. I bought a stock today that's available to members of my channel. And then you also get access to courses, and you also get access to a cool Peg and Peggy calculator that can tell you a quick evaluation of a stock based on the growth input that you put in. So all of this great value and more continuing in the future if you become a basic member of the channel. Thank you guys, and I'll see you guys in the next one.